Hi everyone. So today I want to discuss a very important question that many of you are asking. Why is the market falling so sharply and what exactly is going on? When they have broken the 26 300 level, then we were looking for 26 500 and even 27,000. But now it came below the psychological level 26,000, and then it even broke 25 800 yesterday. That was a most important technical support also. But luckily, they have closed above that. That's a positive sign. See, you might be seeing your portfolio today and it feel like it is coming down. Nifty is going down. The broader markets are even hit more, and the quality stocks are falling without any big news in the headlines. So in this session, I'll break down five important reasons, the core reason behind this fall, and more importantly, I'll discuss, is this panic phase, or this is a buying opportunity in selected stocks. Okay, so let's start with understanding the context, what's happening right now. Over the last few days, if you see, the benchmark Nifty 50 is definitely under pressure, and mid caps and small caps are falling more than the index. And if you look at the stocks like Indigo, Keynes Technology, and others have given sudden negative shocks, and there are specific reasons for these stocks. And rupee is weakening and is hitting all-time low, and the global uncertainty is also rising. So instead of looking at this in one single reason, we need to understand this as a cluster of risk acting together. So what are the reasons? Okay, the first reason, that's this trade deal uncertainty which is going on, along with rupee weakness. Rupee is at all-time low. So the first trigger that started, actually this leg of fall, if you see, that is mainly because of this lack of clarity or delay in the trade deal. And because of that, what is actually happening? The global investors are nervous, and the export import expectations, change, and then the currency markets reaction. So you see, the trade deal getting delayed, it have triggered this entire thing. In fact, at one point of time, when there was an indication that the trade deal may go further and it will get implemented, then we have seen the way market have shot up also. And this delay, that itself has triggered the rupee downtrend also. So in fact, at the present situation, if you look at it, I would rate this as one of the most important reason for rupee fall, at the same time market fall also. So when rupee weakens sharply, then what will happen? FIIs become very cautious, because when they come, they have to pay something. When they take it back, they'll have to pay more to get the dollar. So they will be in a very much disadvantageous position, and the current account deficit, that worries will also come back when rupee weaken, because when you pay, you need to pay more. But because your imports are more, that's why your current account deficit is higher. When imports are more, you are paying in dollar, right? And exports are less compared to, so import minus export, if you see that gap earlier, if it is compared with $1.80 and now $1.90, that is getting widened if you convert that in terms of rupee. And at the same time, macroeconomic pessimism is also rising at this point of time, despite the fact that RBI have come up with some measures, but still that pessimism is still there. So the trade deal plus rupee combination is the first and the most important reason for the market fall at this point of time. Let's look at the second reason, the global central bank uncertainty, whether it is Fed or whatever, right? See, we have, global central bank risk at this point of time. The US Fed meeting is around the corner, and the Bank of Japan, BOJ, Bank of Japan meeting is also very important. So the global markets are waiting for clues on, interest rates. So that will decide the liquidity and risk appetite also. So there is a global risk of turn which is building up, and even if India is doing relatively better, money is nervous globally at this point of time, and the flows into our market also is slightly there are concerns, right, because of the other issue, first two issues that I have discussed. So you can think of it like this: the trade deal delay plus the Fed uncertainty plus the Bank of Japan risk is also there, which is equal to a perfect cocktail for a short-term fear. And that's why you have seen the VIX is also rising last day, despite the fact that few days back it was falling, even when the market was falling. But yesterday you have seen VIX was rising. At one point of time, it goes 6% also. Cool. Now the next reason, that is of course related to the geopolitics and the recent shocks in individual stocks. Let's discuss, right? So that's the third factor, the geopolitical tension and the sudden stock specific accidents. So in just last few days, you see, there have been two, three big stocks and big shocks in individual companies. We have seen Indigo. There is a specific reason. they were aware of these rules and regulations, but still they got 1 year also to get implemented. So it's their own issues, and Keen's technology also their own accounting issues. I've discussed about that separately in another video, and that is basically creating a negative sentiment. And whenever you get back, you get this kind of bad news back to back, especially at the stock level, the market risk tolerance will collapse. It will come down, right? So even if the broader economy is fine, the traders start thinking, what if the next blow up is to my stock, right? So this happened in Indigo, this happened in Keen's technology. There are specific reasons, but when you see this news back to back, then you may start thinking, right? So ultimately, what is driving the market? It is the emotions, it's the psychology that is driving the market, your sentiment. So there is something called as market sentiment. Ultimately, you talk about demand supply that decides the price, but what decides demand supply is your perception and your sentiment also. So your perception now is that these two stock have done or happened like this. So what if in my case, in the next stock, then that leads to your perception, and that lead to your sentiment, and that sentiment either lead to demand or supply. So you will try to sell off. So that create more supply, that will lead to further fall. So that fear is basically leading to this kind of aggressive exit, I would say, profit booking. So the long unwinding will happen, and the unwinding of the leverage positions also will happen, and sell off in the existing stock also will happen, and that lead to panic selling in pockets where there is no fresh bad news also. That is created because of the bad news of these, these are specific companies, right? There are their own reason. Indigo fault, their own reason. I have done a detailed analysis for that, and I've also done a detailed analysis for the Keynes technology as well. Now, the next reason, MTF unwinding and the broader market pressure. This is a very important for traders also. A lot of selling you're seeing in the last 2-3 days is MTF book, margin trading funding, that is getting sold. What does that mean? Many investors bought stock on leverage using the brokers funding, and when the prices fall sharply, what will happen is brokers, they will start reducing the exposure, and that force them to square off or ask the clients to bring more margin. So many of them cannot bring more margin. So what will happen is the positions will be cut off, and the positions will be squared off. So automatically, that is what I mean by this MTF book, right? So the margin trading funding, it's a positions are getting squared off because of the leverage position, and when you don't have the margin. So kind of liquidation you can say, and that is basically creating a forced selling in mid caps and small caps. You might be having, let's say, 1 lakh, and you might have taken the leverage position with the broker funding. So they don't want to lose. When the prices is coming down, they'll either call you for a extra margin. When you don't have it, they'll cut it. So that's a kind of, you're forced to sell. You have no other option. Broker will cut it, right? So the good quality name also fall just because they are part of the funded portfolios. So you see, whatever unwinding that I'm seeing right now, it is MTF book which is getting solved, right? That's why the broader market corrections look so deeper and scarier at this point of time, and the mid caps and the small caps looks completely destroyed in a very short time. And always remember, when money is taken back, first the sell-off will come in small cap, then in the mid cap, and then in the large cap. But now you can see sell-off here, you can see sell-off in large cap also. I'll come to that. But the last reason, that's the panic sentiment and the fundamental reality, right? So the fifth reason is the pure sentiment. As I just mentioned before, everything is based on the sentiment. Everything, the sentiment is based on individual perception. Many perception, many sentiments will be created, right? So that will decide the demand supply. So it's not that demand supply decide everything. When you talk technically, you want to be objective, you can say market is based on demand supply. What decides demand supply? It's not the price. Demand supply decide the price, but demand supply is decided by the perception, or the sentiment. The sentiment is based on the individual's perception. So right now, what we have is there are issues like the trade deal delay is there, rupee weakness is there, Fed and this Bank of Japan uncertainty is there, geopolitical issues there, stock specific shocks are going on, and margin unwinding is there. So what will normally happen? What could be my perception about the market now? That lead to my sentiment. Similarly, your perception, that lead to your sentiment. So that is basically looking at this, it is creating panic. But at the same time, RBI and government have already taken strong step to revive the growth. RBI have cut the interest rate, that a third time have happened, and liquidity at this point of time in the system is abundant. They have gone for open market operation, the currency swap and everything. And many companies' fundamentals are actually improving. But the fact that these issues are there, that create panic. So there is a gap between, the short-term price action and the long-term fundamental, and that's where actually the opportunity lies. So I told you in the beginning itself, I'll also discuss, is this a crash you need to be worried about, or it's a buying opportunity? See, this is a time to put cash to use in this fall, right? When you're getting the fall, but you must stagger it, because you're fighting against the wind. If you're trying to catch a falling knife, you don't know to what extent it can. 26,200 last September, they have made all-time high, and then they have fallen till 22,000 level. So now we are also at that level, and now it's looking like a double top, right? So it is a falling knife, but we need to be very careful. So the important points that you need to keep in mind is, don't panic and sell the quality at the bottom, and don't deploy 100% cash in one shot also. So use a kind of staggered buying, as this volatility will continue for quite some time. See, earlier I was focusing mostly on the large caps, and then like HDFC, and then SBI, and then TCS and Wipro, and some were in mid cap and small cap. But see, even the mid cap and small caps are coming into very good attractive zone at this point of time. So some stocks have very good or improved earnings are there, and that is also completely hammered simply because of their this overall sentiment which is going on. So the quality stocks are there in mid caps and small cap that give much more, that potential reward is higher over there. So the companies where earning calls are good, you can look at that. Fundamentals are improving, but the stock prices have fallen due to the broad market selling. So those are the companies that you need to select and invest, and in a staggered way, so that this is going to give you much more reward. So not only on large cap, select from the mid cap and the small cap also. The price have fallen, but the fundamentals are strong, earnings are good. The price have fallen because of the overall sentiment. See, again, remember, this is not the time to run away from the market by thinking that we have made the all-time high, now it is going to fall. There's a time to build that watch list, like the conditions that I have told you, and deploy cash in phases into quality names. It's not only large cap, mid cap, and small cap also you need to identify. And if you are looking for any mentorship program or help or anything, get in touch with us. If you are looking for live market sessions, we have the live market sessions, so you can get in touch with us. So these are the things that I want to discuss now. See, accept that this fall has multiple triggers. That's something which is very important, right? It's not a headline, it's a combo of multiple factors, as I've discussed. Global policy is there, panic is there, MTF unwinding is there, trade deal is there, rupee weakening is there. So don't search for another reason. So don't search for one reason also. It's a combination. And don't confuse the volatility with the structural collapse. India's growth story, if you see, it's intact, and we will definitely go up only when time was there. RBI and government at this point of time is focusing on growth. Cutting the interest rate itself is such an indication, and many companies are still delivering strong earnings. So there might be a short-term panic because of these factors which I've told you, but that doesn't mean there is long-term structural problem. Structure remain really good, so there's an opportunity. So this as an opportunity you need to use, and but again, systematically, scientifically, and logically. So what you need to do is create a list of high quality large caps plus selected mid caps, track their earnings, management commentary, guidance, and enter in phases when the market give you fear-based dips. And you know, don't avoid this blind bottom fishing in this junk small caps, because a stock have fallen 40%. That doesn't make it cheap, right? You need to check the debt, you need to check the governance, you need to check the promoter quality, promoter equity, and you need to check the earnings visibility also. Don't buy just because the price is lower. So when you look at a particular stock, you have seen that 50% has fallen. Now it will bounce back. So if this recover, you will get 100% return. 50% fallen means from 100, let's say it came to 50. Now it goes back to 100, means 100% return. So don't look at those kinds of stock. Why? Because the business is stronger than the fear in the market. The price have come down just because of the overall market is correcting. And also respect the risk, because you're fighting against the wind. Keep sufficient cash so that you can add in different positions, different level. Position sizing need to be properly when you cast the falling knife, and don't over leverage in this situation, and don't rely on this MTF in a falling volatile market, right? So it's about survival. It's not about heroism when it comes to this kind of phases. So what I have discussed is the reasons for the market fall, right? Trade deal uncertainty is there, rupee worries is there, rupee is weakening, and global central bank uncertainty, Fed or Bank of Japan. Geopolitical issues there, and the recent stock specific shocks are there, and the forced selling, that MTF unwinding, through MTF unwinding, which is again one of the reasons because you are forced to sell since you don't have the margin and the price is coming down, and the panic sentiment was just overriding the improved fundamentals also. But inside this chaos lies the opportunity, especially in the strong large caps, those who have corrected, selected mid caps, where the fundamentals and earnings are strong and the price have come down because of the larger market is falling, and the quality financials, like some of the NBFCs, where rate cuts and liquidity are strong tailwinds because they get that boost, right? So your job is not to be panicked, but to think logically, clearly, scientifically, systematically, and study deeply and allocate gradually in phase. If you want, if you want to learn this in the live market, the live market mentorship, get in touch with us. We have the sessions. So I see you there. Thank you so much.